Hey everyone, I just wrapped up meeting with dozens of clients at the National Multi-Housing Council Conference, and 3 key trends emerged from my conversations with investors. First, investment activity in general appears to be gathering momentum. Investors told me they had capital that was ready to deploy and they're anxious to put it to work. Unlike prior years, where investors were hoping to get at least a couple of deals done over the course of the year, this year several clients told me that they planned to get 3, 4, 5, 10, or even 15 or more transactions completed in 2026. This is a big difference from what I've heard in past years. Now, there was a substantive dichotomy in the marketplace. Institutions and major investment funds, especially those with dedicated source of capital like family offices, were much more enthusiastic for the years to come. I noticed there were far fewer syndicators at the event this year, but those that did come were generally the strongest and largest of the syndicators with proven track records. Nonetheless, there was a broad-based positive sentiment about the 2026 investment climate. That said, many of the investors I spoke with recognized the headwinds the industry faces. The slowing pace of job creation could weigh on multifamily and commercial real estate space demand this year, and in the case of multifamily, the excessive development of the last few years, particularly across the Sun Belt, could prove to be a significant challenge. Nonetheless, there was a broad belief that following what may be a choppy performance in 2026, once that supply overhang in the Sun Belt clears off and it's digested, performance will accelerate. The second significant trend that numerous investors highlighted was the increased availability of debt capital. Whether they were discussing the 20% increase in allocations for Fannie Mae and Freddie Mac, or the general increased availability of bank lending and other lenders, the consensus was that accessing capital from the debt market won't be challenging this year. In addition, many believe that the interest rates could tick lower this year, although there was still a lot of uncertainty about the rate outlook. The third significant trend I heard was that many of the financial institutions are beginning to hold investors' feet to the fire on overdue loans. Over the last few years, there has been a climate of extend and pretend that was allowing investors to hang on to assets that were facing headwinds and probably losing value. It looks like 2026 will be the year that the lenders begin to clean house and move those assets to market. In several cases, the owner's equity will be wiped out and some banks will absorb losses on some of their loans. But it appears that many of the lenders are now at a point where they can absorb those losses and resolve the loans that are underwater. In some cases, the lenders are partnering with current operators to manage a clean transition to a new investor who is probably a little stronger or has a better balance sheet, and that new investor will effectively take over the existing debt and maybe get some more leniency from the lender, maybe extending that loan for a period of time while they get the new house in order. So there's some cases where the lenders are partnering with the new investors to make this all work under some pretty good terms. In other cases, the lenders are foreclosing on the asset, potentially putting in a receiver to operate the property until the operations are stabilized, and then they can sell it off. But for the investors at the NMHC conference, this was broadly viewed as a positive shift that will finally bring troubled assets to market and enable stronger investors to acquire those properties at new, much lower prices and a lower basis. So in general, the sentiment at the National Multifamily Housing Council Annual Conference was positive, with many investors clearly indicating that they plan to be more active this year. Some headwinds remain, and there was still some uncertainty about how 2026 will play out. But the general consensus was that 2026 is the turning point in the multifamily market that they've been waiting for. The common belief was that this is the beginning of what could possibly be a very healthy run in the broader commercial real estate market. And I gotta say that many investors that I spoke to are definitely keeping their eyes on the horizon.